From an underperformer to an outperformer, energy is surging higher. It is the top sector this quarter, up more than 12%, pacing for its best quarter since 2011. This as crude breaks above $74 for the first time since November 2014. Where do you go here with this continued rise in TI?
I think you stick with it, okay, because you still have a lot of factors that are keeping production and particularly delivery in the U.S. of Permian Basin oil in particular to distribution hubs. It's keeping the price of oil higher. But I also want to say, Mel, that this is a great segue from the earlier segment on financials because energy languished a lot during 2017. And the same sort of negative tone that we have about the financials today applied to energy this time last year. In the fall, it rallied, and it really hasn't looked back. And I think that's a parallel here. You look at the price of oil as similar to what the yield curve needs to do for financials. Sorry, I'm going backwards, but I think it's important. Investing is about pattern recognition, okay? And what you're seeing in the energy sector, I think it will continue, and it applies just at a later date to the financials.
I understand what you're saying about sentiment, but the thing that's different and in a key way between energy and financials when sentiment was so whatever it was that people seem to be in the bank trade right now, and people seem to be underweight or underexposed to the energy trade right now. There are the incremental buyers that could still come into energy.
Yeah, but, you know, investors are always waiting for things to get comfortable. And I think these trades have gotten comfortable enough where people say, OK, I can be there now. They didn't want to be there 2 years ago. When we were talking about it on this set 2 years ago and owning the banks, a lot of people were throwing arrows, shooting arrows at us. It turned out it was OK. Even a couple of months ago, when we were talking about the oils and the oil service companies and Chevron and saying, people were saying, nah, that does, but they're coming around. You know, the price has gone up enough where the average investor wants to get in and the columnists feel like they can write about it comfortably. I think you really have to pay attention to the fundamentals. So you ignore book value on the banks at your own peril. I understand they go out of fashion, but you've got to pay attention. You've got to pay attention, as Pete says, to what's going on in Europe, because we've got central banks that are out of sync, the U.S. Central Bank and that central bank, and that's going to matter. It'll provide opportunities. So, you know, you watch halftime report, you get the halftime.
It's a big patch here. We got integrators, we got E&P names, we got refinery.
I'd still buy Chevron.
Okay.
Chevron in here. I continue to like it. I think I'd buy Exxon as well.
I'm extremely overweight, unfortunately, I think. And I say unfortunately because I don't like as much weighting as I've put into this sector. I am in it. And a matter of fact, I added one more.
Is that just because the sector went up far faster than you thought?
Well, I think it's because a lot of when it didn't track with oil, many of the names, whether it's Exxon or Chevron, they just didn't move the way that you would expect them to move when you see the oil move that it had.
That's true.
So I still think there's room, even if oil grinds for a while, Mel, for some of these names to continue to rise higher, even throughout that grind. But I am so exposed, and I've got an unusual for you today that's going to be showing up a little while later.
Well, that's a tease.
That's a tease. But I am in the service names. I'm in the E&P names. I mean, you go across the board.
Number one pick there, though. Number one pick in your portfolio, yeah.
If I had one, it's Exxon. But Chevron's really close, just because of the underperformance.
Yeah. All right.
I'd own the group there completely. I mean, I think that we finally have a supply-based market. Upside is fine. Oil prices we can take. The world needs 7% less oil to produce the same GDP than they had, 10 years ago. This is definitely a place to be. Earnings are booming. Own it all.
And Jim brought up the Permian. I think that's really important because you look at the names with the most exposure in the Permian, and that is the names that I think you want to be in. Occidental. You look at Chevron and look at Exxon. I mean, those names are so weighted in that area. They all have international. They've all got all these other things. But that area, I think, is something that's monstrous.
And to focus on that, as I did, does, run the peril of you can't ignore what's going on with Iran, Saudi Arabia, et cetera. So there's obviously a lot of factors in play. But the reason that I think we're wise to focus on the Permian is because there is clearly a bottleneck there in transporting oil out. That is very solvable. I like a situation where you've got value plays and you can see that the situation is going to be solved with more pipelines.
Not a quick fix, is it? I mean, that's not a quick fix.
It's about a year. Yeah. But I mean, most of the pipeline companies are looking, we're already halfway through 2018. So when we say most of the pipeline companies are looking at new capacity coming on in 2019, that's not that far away. And the market will anticipate that. So this isn't a bad time to be in those Permian plays.
I miss the group. I miss the move. And I think I'll get an opportunity unless Pete wants to give me some of his overweight at his cost. I'm happy to take that.
My cost.
But
he doesn't like you that much.
I like you, but not that much.
But I think there is time. I think you can buy it. I also think you'll get another opportunity to buy it after Saudi Aramco prices. And to me, this is the move to get.
Because you think oil prices will fall after the price of the IPO?
Yeah, because they're creatures of habit. Now, you have some changes, right? You have Venezuela that's not able to produce. You have in the Middle East, who knows what's going to happen with Iraq and Iran over there. Iraq is, producing fine now, but Iran, we just don't know, right? So,
do you have a specific area, though, in energy? I mean, are you looking specifically like services, or do you like E&Ps, or what specifically would be the first area you'd say, you know what, this is sold off enough, I want to get in? Which one would you go for?
I think it's kind of a homogeneous group away from that gas, so I'd stay away from the heavy gas companies. You see that Icon got out of LNG or pared back, so I always thought that was inflated. So for me, I'd go with some of the big ones. I'd go with some of the small ones. I mentioned Denbury yesterday. I'd like those. You still have Range Resources, where I think is just moving because the junk's moving. I wouldn't be in there. Right. So you'd be selective, but be heavy in the oil names.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.